Good day traders, this is Stefanos on behalf of Tixee, and in today's webinar we'll be giving a look back of the market for the week of the 19th until the 23rd of September. Looking at some of the highlights for over the course of the past week, we had shares of Costco which tumbled after the company reported fears of increasing costs, and on the Forex front, the US dollar had yet another stellar week after the Fed hiked rates by a further 75 basis points in its most recent meeting on Wednesday. But first, the disclaimer. As always, please note that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment, trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. So, kicking things off with stocks first, as we mentioned, we had shares of Costco tumbling. Now, over the course of the week itself, prices dropped by close to 6% or $30 per share. Now, to locate the stocks, what you simply need to do is just on your Dixie Web Trader, you can just type in the ticker symbol, which is cost. Obviously, the stock itself will appear, and you can just click on the little icon here, which is going to bring up the chart. Now, I did set it onto the weekly time frame just to gain a better idea of the overall context of the stock price itself. And as we can see, this was the second consecutive week in the red, and it pretty much dropped by more or less the same magnitude last week as well, shedding by about 7%. So if we bring up the tally for these 2 weeks, it's pretty much down close to 13 or 14%. Prices at the start of last week were trading all the way up to $540 more or less, and now they're trading all the way down to $474. So it's more or less like a $70 drop from last week. Now, the reason for the drop and the potential reason as to why investors are fleeing is because, obviously Costco reported that they have fears of increased shipping and labor costs, and also the fact that margins narrowed from last year. So this would point to the fact as to why investors could potentially be shorting the stock rather than actually going long. Now, this could also, the increased costs themselves, they could very well spill into the pricing of their goods and services, as it could mean that an increase in the prices for their merchants themselves, because obviously they might not want to absorb the full increase of shipping and labor costs, so that may be passed on to some of the pricing of their products and services. It's something that also the logistics giant FedEx didn't hold back to doing this week, after they reported they'd be raising their prices on an average of 6.9%, which is quite a staggering figure, as it experiences a global slowdown in shipping volumes. We also saw last week, if I pull up the chart for FedEx as well, that it dropped by more than 20%, which you can pretty much see from this candlestick here. Reason being is because they missed both of their earnings estimates, but then several brokerage firms, if you were tuned in for last week's outlook, several brokerage firms, basically what they did, they came in and downgraded the stock. So we had 3 or 4 different warrants, I believe. So obviously this also weighed negatively on the stock's price itself. So you can see there are quite some significant headwinds, not just for retailers, but it's in general. If we look at the indices today, so if we pull up the S&P 500, you're pretty much going to see that it's pretty much telling the story across the board. So it does look somewhat similar to the chart of Costco. So if we put them side by side, so you've tried to basically screenshot this image right here, and if we go back onto Costco, you'll see that it's like more or less mirroring what the S&P 500 is doing. We had one green week ahead of the 2 consecutive weekly declines. So yeah, this is with regards to stocks. Now, moving on to the FX markets, where things were quite active, as we said, we had the Fed's interest rate decision, which came in last Wednesday, and then we of course had the FOMC meeting minutes, which followed later on. Now, the expectation for the Fed leading up to the event was to increase the rates between 75 basis points to 100 basis points. And what they did come with, they did increase the rates by 75 basis points. And well, the rest is pretty much history, as you can see from the chart of the dollar index itself. Now, I did set it again onto the weekly time frame, and you can see it's pretty much skyrocketed. If I just zoom in a little bit, just to see what kind of highs we're looking into, we're tapping areas pretty much from 2 decades ago. So 2002, 3rd of June was more or less when prices were back at this level. So this, you can also imagine what meant for other major currency pairs. Any other currency pairs we're going to look into, they're likely going to be lower against the US dollar. So if we look at first, for example, let's switch over to the Dixie Web Trader again. So we'll look at the euro dollar first. And again, I'm keeping it on the weekly time frame, and you can see from the chart itself that, again, this is just like with when we're looking at stocks, it's a second consecutive weekly decline. Now the drop is a drop close to 2 decade lows. After it fell by more than 3%, or 300 pips over the course of this past week. We had some other currency pairs which were even worse hit. So if we look at the pound dollar, we'll see that the impact here was even worse. Again, it's 2 consecutive weeks in the red, but even if we do consider this the week in the green here, even before that though, it still had another 3 other consecutive weeks in the red. So this little candlestick didn't even make up for the losses of the previous week. So we can pretty much see how bad things are looking with regards to certain currencies. Now the pound dollar drop was even more staggering, as we said. It dropped close to 5%, or 500 pips over the course of the past week. And again, if we just look at some of the other pairs, so let's look at the Australian dollar, US dollar. So we just zoom out so you can see also it's lower. If we look at the Kiwi dollar, it's going to be more or less the same story, and we can see the same. And if we look at the US dollar, Japanese yen, that's the last one as an example, this one should be higher. And as we can see, I mean, it's one of the, I guess, the only ones that weren't impacted as much, because you can see it's still in the green, but only marginally so. So you can look at one more, let's say the US dollar Canadian, and this one should also be moving higher as it's expected. So overall, it was a pretty strong week for the US dollar, and this could be the narrative for the next couple of weeks and months to come as well, because at the FOMC meeting minutes, they mentioned that they'd be looking to continue with this kind of rate hike cycle, and analysts, after everything was said and done, they're now pointing to an expectation of interest rates reaching a level closer to 4.4% by the end of the year, and a rise further into the next one. So as we can see, there's no stopping with regards to interest rate hikes for the foreseeable future, which again could imply additional strength for the US dollar. Now, all of these reports are of course not just affecting the FX markets and the US dollar in particular, it's also spilling over into the equity markets and the commodity markets as well. So if we look at prices of the WTI crude, and again I'm keeping things on the weekly time frame, so as you can see, typically any commodities that are gonna be closely pegged to the US dollar, we can expect that generally they're gonna have a more or less inverse correlation, because as the US dollar strengthens and becomes more expensive to acquire, then we can expect these commodities to drop in value, because obviously it's more expensive to acquire them. So as we can see with the crude oil itself, it fell by more than 8%, or $6.50 over the course of the week, and this was also its 4th consecutive week in the red. And if we look at gold as the other commodity, where its inverse relationship is even more pronounced, and also we can see here that it's also pretty much finishing the week in the red, dropping close to 2%, or more than $30. So again, it's pretty evident what kind of impact this environment, this high interest rate environment, is having across the world and across all markets as well. Again, it's not just impacting the FX markets, but as we can see clearly, the commodity markets and the equities, as we saw from the S&P 500. And yeah, there you have it. This is as far as the look back and review for this week. I hope you enjoyed the video and you found it useful, and I'll catch you in the next one. Until then, trade safe.